Welcome back to Teshkid FX for another Quant price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the Quant chart, which at the time of this recording is giving us a bit of a bounce to the upside after fully maximizing our yellow target area down here in the formation of this wave 2 in a move that has now given us a break above the 20-day MA and also a break above our key area of resistance at around the $133.2 mark. And after breaking those key areas of resistances, we have continued pushing even higher, and I'm now watching our next key area of resistance at around the $147.9 mark. Quant has also continued to obey the Elliot of structures, where I believe that whatever we are seeing at the moment is the start of a bounce to the upside in the formation of these higher Elliot wave Quant 3. And before I get further into the technical analysis and also give you my next price targets here on the Quant chart, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to continue with the video here on the 4-hour chart by first giving you a quick recap of what has been happening, where you can see that after seeing the all-time high, we started the bear market where we had been seeing lower prices in this ABC corrective structure in a move that has now given us a low at around the $40.1 mark. And after seeing the bear market low, we started this massive bounce to the upside in a move that has been obeying the Elliot wave structures, where you can see that I have this Elliot wave structure in blue having the wave 5 making its peak at around the $229 mark and also completing the formation of that larger Elliot wave Quant 1 to the upside. And after seeing the formation of a larger Elliot wave Quant 1, whatever we expected next is the formation of a larger Elliot wave Quant 2, which is a corrective wave, and because of its corrective nature, we also expected to see an ABC corrective structure also play out, where we are seeing this ABC corrective structure giving us a low at around the $94.4 mark. And after seeing the low for that second wave, whatever we expect on the long-term scenarios is a massive bounce to the upside in the formation of that wave 3, and sketching out a minimum target area to the upside in the formation of that wave 3 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that higher Elliot wave Quant 3 at the fib level 1.618, and that is at around the $396.9 mark, and that is the minimum that I'm expecting that higher Elliot wave Quant 3 to the upside to do, which is an impulsive wave. And because of its impulsive nature, we also expect to see a 5-wave structure in formation within the formation of that higher Elliot wave Quant 3, and I believe we are seeing such a move here on the Quant chart, where you can see that after seeing the low for that second wave, we started this 1-2 setup over here before we started this Elliot wave structure, where I'm terming that as the first wave to the upside, making its peak at around the $165.5 mark. And after seeing the high for that first wave to the upside, we started this corrective structure in a move that has now given us the low for that second wave to the lower side. And by first showing you that the second wave down here has done the minimum that we expect a second wave to the lower side to do, by connecting the Fibonacci's from the low of the first wave to the high of that wave 1, that gives me a minimum target area to the lower side in the formation of that wave 2 between the fib level 0.5 and the fib level 0.618, which you can see that we have fully maximized down here. And after seeing the low for that second wave, whatever we expect next is a massive bounce to the upside in the formation of this wave 3. And before I sketch out my minimum target area to the upside in the formation of that wave 3, allow me to first give you the scenarios that we can expect to play out, basing it on the key areas of support and resistances, where you can see that we have managed to break above our key area of resistance at around the $133.2 mark. And after breaking above that key area of resistance, it gave us support that we needed for us to continue pushing even higher, and we have now made a peak at around the $147.9 mark, which is also acting as resistance. And that's the reason as to why here on the 4-hour chart you can see that we have started to see a bit of a bearish candlestick over here, and the reason as to why we are seeing this is because we have managed to get rejected after touching that key area of resistance, and that's the reason as to why we are seeing this bearish candlestick here on the 4-hour chart. But I'm expecting Quant buyers are going to get back into the market once more, give us that pump that we need for us to break above the next key area of resistance at around the $147.9 mark. And once we manage to break above that key area of resistance, then I'll be expecting a retest before we continue pushing even higher to fully maximize our target areas in the formation of that higher Elliott wave count 3. And for us to also fully maximize our target area in the formation of that wave 3, I'm also expecting to see a break above the wave 1 high, which lies at around the $165.5 mark. The moment we manage to break above the wave 1 high, then that will be enough confirmation that whatever we are seeing over here is that massive bounce to the upside in the formation of that wave 3, and sketching out a minimum target area to the upside in the formation of that wave 3 by connecting the trend based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, and that is at around the $230 mark, and that is the minimum that we can expect these higher Elliott wave count 3 to the upside to do. And we also need to have a worst case scenario that can also play out on the short term scenarios, just in case the buyers are not able to push the price higher to give us a break above the key area of resistance at around the $147.9 mark. In case such a move plays out, then we can expect a bit of a corrective structure over here in a move that could get us to the 20-day MA, and I would expect the 20-day MA to give us support that we need for us to continue pushing even higher, see a break above the key area of resistance before we see that retest and continue pushing even higher. And in case we lose the 20-day MA, then I'll be expecting our next key area of support at around the $133.2 mark to hold, and then give us that massive bounce to the upside, break above our next key area of resistance at around the $147.9 mark, see the retest and continue pushing even higher in the formation of that wave 3. So that is what I'm expecting here on the short-term scenarios, and I've given you the worst case scenario and also a move that could possibly give us higher prices, see a break above the key area of resistance at around the $147.9 mark, continue pushing higher in the formation of that wave 3, and getting to the indicators to see what movements will be supported. Here on the RSI we are trading at around the 66 mark, meaning we have massive room for us to fully support higher prices in the formation of that higher Elliott wave count 3. And also taking a look at the MACD, we have been able to print a bullish cross, fully supporting higher prices in the formation of that wave 3. So let's be patient and see how that plays out, and I'll be keeping you updated.